According to the Internal Revenue Service, in 2024, taxpayers were split, with nearly half waiting until March to file their tax return. And if you're one of them, no worries. We've got an expert on deck to make sure that you don't miss out on a single cent of that refund. Joining us now, we've got Andy Phillips, who's the H&R Block Vice President of the Tax Institute. Andy, great to have you here with us. You highlighted 3 changes that taxpayers might not be aware of. So let's start with the 1099K income. What's changed there?
Hey, Brad, good to see you again. Thank you for having me back. So like we talked about back at the end of January, probably the biggest tax law change for this tax season is around the form 1099K. So this form is used for a few things, but people who are impacted are folks who are selling maybe goods or services through an online platform, like maybe an Etsy or something like that, or who maybe provide in-person services, but take payment through a third-party payment app like a Venmo or a PayPal. So the threshold to receive a Form 1099K went down drastically from 2023 to 2024, from you had to have over $20,000 in transactions or at least $20,000 in transactions and over 200 transactions during the year. For 2024, went all the way down to $5,000 and you just have to have 1 transaction. So what that means for this year is a lot more people are getting Form 1099Ks and a lot for the first time. So the questions are, as you can imagine, what is this? What do I do with it? Is the full amount taxable? You know, the tip there is often with 1099 forms, you file with tax forms, no, it shouldn't all be taxable. So you want to make sure you're taking advantage of any deductions you can take to offset that income. But that's definitely been a big early season driver for us. People having questions, understanding what it means to their taxes.
And so what about 1099 DA income? What are the changes there?
Yep, so that one's more on a look forward, but starting in 2025, those folks that invest in virtual currencies, think Bitcoin and other cryptocurrencies, a lot of times in the past, you may not have necessarily gotten a 1099. Some of those platforms did, but not all of them did. And so starting in 2025, meaning for your taxes next year, for those virtual currency transactions, they're going to be required to issue you a new form called 1099-DA. What's important to remember for both that DA and for the K is not only do you get that form, it also means the IRS gets a copy of that form, and in most cases, your state will as well. So they're going to know about it. And so sometimes people don't always understand that those crypto gains and losses need to be reported and can be taxable if you have a gain. So that'll be a big change going forward.
And for taxpayers with children, how has the child tax credit changed?
Yeah, so that child tax credit, is really just an inflation adjusted amount where the child tax credit is $2,000 per child, but a portion of that is refundable. That's called the additional child tax credit. What that means is even if you don't owe taxes, you can get some amount of that $2,000 to create or increase your refund. So last year it was $1,600 that was refundable. For 2024, it was $1,700. So that isn't necessarily driving the questions. But I'll tell you, questions around family, questions around life changes, like, hey, I have a nephew living with me. We're seeing a lot of questions around education this year. Where that often comes up is you have a child going off to school for the first time. And so you don't know the rules yet. You need to understand, what does that mean? What credits may you be able to take, like the very valuable American Opportunity Credit? A couple other situations where we're seeing quite a few questions about education credits and other benefits is one, people that go to grad school. Because once you get out of your undergraduate degree and move to grad school, the rules are a little bit different. And then people that are adults going back to school and understanding what they may be able to claim.
Why do you recommend filing early? And we asked this question because there have been a lot of changes and prompted by the Department of Government Efficiency, where we know that there have been federal layoffs that have also taken place here that have impacted the IRS. Why do you recommend filing early this year?
We're in March, so you can still file earlier than April. But what I would focus on is a couple of things. First, file as early as possible. If you're due a refund, your return's going to get processed more quickly the sooner you file, and you're going to get that refund distributed to you. Another thing to think about is when you submit your tax return to the IRS electronically, your Social Security number is then locked. No one else can then use your identity to file a tax return with IRS electronically. So it effectively locks out like an identity thief or a threat actor who has somehow gotten your information through, sadly, one of the breaches we continue to see in the news, large scale breaches across the country, across the world. A little bit on that, though, on those questions around what do these changes mean? What do these mean to filing taxes? One, the rules haven't changed. The rules have not changed. Whether you're due a refund or you owe taxes, unless you get an extension, taxes are still due April 15th. Obviously, the incentive is clear. If you're due a refund, we see the IRS continue to process returns, continue to issue refunds, and we expect that to continue. That said, if you're filing, make sure that you're doing everything you can to follow the happy path in the processing of your tax return. File electronically, avoid any mistakes that may result in a human having to touch your tax return, because it's foreseeable if you don't follow the happy path, meaning a human has to intervene in the processing of your tax return and your tax refund, you may see a delay. Likewise, for those people that are due, that have a balance due, you still have to pay that. The laws are still in place. And so don't think that there's some magic way that you're going to get out of that. In fact, even if you request an extension of time to file past April 15th up until October, that's only an extension of time to file. It's not an extension of time to pay. So if you're one of those folks who's going to request an extension, that's okay. But make sure you calculate and make a payment of what you expect to owe to avoid any penalties and interest, which the IRS will begin to, kind of impose against your liability starting after the due date.
I have to hustle to my finish here, but just very quickly while we have you here, Andy, any last minute changes that you can make still before you file?
Yep. I'll hit three real quick for you. One, for folks who have a traditional IRA, you can still, up to the due date of your return, make a tax deductible contribution to your IRA. There are limits on that. You can contribute generally up to $7,000 per year, an extra $1,000 if you're 50 or over. That can be impacted by things like maybe your income level, whether you or your spouse are covered by an employer's plan as well, and your income. Second one, I'd say if you participate in what's called an HDHP or a high deductible health insurance plan, and you have a health savings account, you can still make a contribution up to the max amount, up to the due date. Again, you can deduct that and reduce your tax liability. You want to make sure you're counting any contributions you made during 2024 by you or your employer to make sure you don't exceed your contribution limit, but that's an option. One last one, at the state level, many states, if you're saving for your child or someone's, let's say your child's education using a 529 plan, a lot of states will allow you to make at the state level a tax deductible contribution to that HSA, again, up to the due date, reducing your state tax liability. I live in Kansas. We have that benefit. And here's what's really cool. You don't necessarily have to participate in a 529 plan offered by your state. I participate in one from another state based on the advice of financial advice, but I still get that tax deduction on my Kansas return.
Andy, great to have you here with us. Thanks so much. Appreciate it.
Thanks, Brad.